All right, our third and final statement is called the statement of cash flows. And think back to when we talked about accruals earlier with that $100,000 truck example. That's an accrual, and that's kind of a weird thing, right? It's not cash. Some people say, well, all right, accruals are great, but I want to know the real cash number. How do I find that out? Well, you find it out by looking at the statement of cash flows. It's divided into what we call three parts or three paragraphs: the operating, the investing, and the financing. Now, investing is not stocks or bonds. In this case, it's like company investments into assets or equipment. The financing part is the true stocks and bonds part, but most of the focus is on the operating section because that's the section that's really part of a company's daily operations. Essentially, what's the real business look like? So here's how we compute operating cash flow. I'm actually not going to go through every single line item because it's a little bit complicated here, but I'm just going to show a couple to give an example. So you would start with net income, okay, and then you would adjust. So as one example, pretend you made a certain number of sales, but some of them were in the form of accounts payable. So you sold 100 RMB of product, but only 80 RMB got paid in cash. 20 RMB, those people are going to pay you later. So what you do is you would subtract out 20 RMB from your cash sales or your cash net income. Conversely, inventory, if you sold 5 shirts in your business, you would consider 5 shirts in your cost of goods sold, but pretend you actually bought 7 shirts total. So you bought the 5 you sold and you bought 2 extra, they're just sitting there. In the cash flow statement, you would add those other 2 into inventory, which would increase your cost of goods sold, which would then lower your net income. So it's a lot to follow, a little bit tricky. You don't have to worry about every single line item now. Just get the main idea that essentially you're starting with net income and you're adjusting for these instances where accruals threw it off one way or another from cash.
那么就来到了我们的第3章，财务报表，也就是现金流量表。刚刚 James 跟大家简单的介绍了一下它里面包含的一些项目。那么同样呢，我们现在也来一起看一个例子，同样是以茅台的第3季度2020年第3季度的财务报表为例。那么跟现金流量表跟利润表的原理是相同的，它是一个时间段内的企业的现金的流动情况。那么我们同样可以看到，当然第一行就是现金流量表，第二行是它的这段时间段是哪个时间段，我们可以看到是2020年的1月到9月。也就是前3个季度的现金流量情况，编制单位同样是茅台，币种人民币，单位是元，也是未经审计的这个季度报表。那么我们来看这个，同样是有两列，第一列呢就是2020年的前3季度，2020年前3季度的就是1到9月份。那么另外一栏呢，当然也是它的同比，就是相比于19年的前3个季度1月到9月而言。那么可以看到，我们刚刚说了这个。企业的现金流量表可以大致分为3种现金流量。首先第一个是经营活动所产生的现金流量，就是说你跟企业去提供商品、劳务以及等跟与公司经营相关的一些活动所产生的现金流入或者是流出。可以看到茅台的这个经营活动的现金流入至前3个季度的总额是在730亿人民币左右，那么同样的流出呢是在479亿人民币左右，所以它的在经营活动这个分栏的下面，它的这个流入是大于它的现金流出的，就是说它现在的这个现金的余额是在增加的。这前3季度，刚刚我们讲完了第一块，就是企业的经营活动所产生的现金流，就是跟它的经营啊、生产所相关的一些现金的流入跟流出。那么第二部分呢，就是投资活动所产生的现金流量。我们可以看到，比如说这个投资活动下面可以分为收回投资收到的现金啊，包括一些处置固定资产、无形资产，还有其他长期投资收回的现金金额等。所以总的加起来，我们可以看到茅台的前3季度的这个投资活动现金流入小计是在3亿人民币左右，那么流出呢是在16亿人民币左右。所以如果我们把这个流入跟流出就是一咔嚓把它们加到一起呢，我们就会得到负13亿人民币。 因为你流出的金额是负的嘛，所以它投资活动其实是流出了13亿的现金流量。那么这就是对于茅台的投资活动所产生的现金流量。我们再来看第3个大部分，也就是筹资活动所产生的现金流量。可以看到，首先你当然有这个吸收投资所收到的现金，然后对于一些筹资的，那么茅台是只有一项筹资活动流入的现金小计，就是在8亿人民币左右。那么我们如果是再回到它的流出小计的话，就是它筹资活动产生现金流量的流出，那么大概是在负238亿左右。所以这个数字呢是它的一个筹资活动产生的一个流量净额。那么如果我们现在得到经营活动产生的现金流量、投资活动产生的现金流量，还有筹资活动所产生的这个现金流量，我们把3个现金流量的一些净额加起来，就会得到茅台在这个前3个季度所产生的总的现金流量净额。我们可以看到这个第5项，这个就是它的现金及现金等价物净增加额。那么如果我们把这个净增加额再加上期初的现金以及现金等价物余额的话，所以我们看到它的这个期末的现金以及现金等价物的余额就是1209亿人民币。那么这里的这个 ending balance 就是结束的期末余额，其实就是我们资产负债表中的现金以及现金等价物的余额。这里的这个现金流量表跟资产负债表是联系在一起的，这就是为什么我们说3个表其实都是相互连接的。那么这里就是我们的现金流量表，到此为止。我们的这个例子看下来是不是会更加清晰一点呢？
All right, so if you're just looking quickly at the statement of cash flows and just wondering what jumps out, some things that I look for personally are items that are separated out here, but which aren't clearly shown on the other statements. An example might be employee stock options expense. Sometimes it's broken out clearly on the income statement. Sometimes it's buried somewhere. Capital expenditures and depreciation. These are things that are not always clearly separated on the income statement, but you need them if you're going to do a discounted cash flow valuation, and we're going to get to that in a coming section. Another thing that's interesting to me is knowing how much debt was issued or how much stock was issued or repurchased. A final thing is, were accounts receivable a big percentage of sales? Now, I could go on to the balance sheet and take a look at accounts receivable and compare it year over year and compare that to sales. I could do the math manually, but it's just a lot easier to have it broken out on the statement of cash flows. All right, red flags, the dirty stuff. Let's talk about this right now. So accounting gives rise to a number of warning signs, but my warning sign about the warning signs is that they're relatively well known by now. And so like the true crooks, the bad guys, are a little bit sneakier now and may take action to try to cover up these things, but it's still good to know. And by the way, most accounting cheating happens on the revenue line in sales to begin with. Okay, so it can be fairly hard to detect. But a standard thing, we mentioned this earlier, is accounts receivable growing faster than sales. In other words, if I'm getting paid a lot of money, but come to find out, I'm not actually getting paid cash for all that money, and the discrepancy is growing year by year, I might be, if I'm a company, might be forcing my sales reps to make a bunch of low quality sales to buyers who can't really pay. Say, you know what, pay later, pay 60 days later, and maybe they will, maybe they won't. So that's a sign of a deterioration in sales quality. Another one is a slowing cash conversion cycle. This sounds complicated, but let me explain it with a concept first before we get into definitions. All right, imagine I'm a store. I buy a product and it sits in my inventory for 30 days. Then I sell that product to somebody and I sell it on credit, meaning it's an accounts receivable to me or an accounts payable to the purchaser. And I have to wait another 20 days before the actual cash comes in. That's 50 days from when my cash goes out to where it comes back in, or almost, because I get to subtract out how long that item sits in my accounts payable for. So if I don't pay the guy whose inventory I bought for 10 days, my total cash conversion cycle is 40 days from when the cash goes out to when it comes back in. So if that starts to get worse, that shows a company that's got a deterioration in business. And I've got the exact formulas here if you're so inclined, but focus on the concept first. And by the way, that's a key part for anything in finance or in investing. Get the concept before you get the formula. You know, I've trained so many, literally dozens and dozens and dozens of analysts, and I think the number one mistake I've seen is people who just memorize the formulas without understanding the concept, and that knowledge is halfway useless. So get the concept. Okay, back to this recurring one-time charges. A one-time charge is supposed to be a one-time charge, and analysts mentally disregard that. Well, guess what? Dirty CFOs and other company types know that analysts disregard those one-time charges, so sometimes they keep popping up again and again. If you see something 2 or 3 times or more, bake that into your assumptions. Don't let the company fool you into tossing that out of your analysis, especially after things like mergers. These restructuring charges sometimes just go on and on and on year after year. So consider that to be a real ongoing expense. Another one is a large amount of like other stuff. If it's a big item, I want to know what it is. Don't just tell me it's other, all right? And finally, it's not purely accounting statement related, but if a CFO suddenly resigns, the guy or the girl who knows the most about the company's financial condition, that's a warning sign. One last thing, very quickly, speaking of quality of accounting and accruals. Now we accept accruals for what they are, and we have the statement of cash flow to reconcile, but there's some backstory here. Richard Sloan, who's an Australian accounting academic, and by the way, for a former penal colony, for whatever reason, Australia turns out a lot of accounting professors, which is a very rule-following profession, so it's interesting, but great. Anyway, Richard Sloan looked at accruals and found basically that if you went long, I mean bought companies that have very high cash flow relative to very low accrual earnings, and short sold companies that have very high accrual earnings relative to low cash flow earnings, you would beat the market by 18 percentage points per year, which is like huge. You'd think he'd be super famous from that. Well, now he is. It took him 6 years to get his paper published because the accounting profession, the editors of these journals, didn't like the idea that this brilliant accrual system was clearly being manipulated. And so finally he got famous, and finally now we have the statement of cash flows, partly because of efforts from him and others like him. All right, let's wake up and have a quiz. First question, assets and liabilities on the balance sheet are ranked in order of what? I'll pause while you think, but we both know, I hope we both know, the answer is liquidity. Okay, second question, which one of these is an accrual expense? Remember, accrual is not real cash. Capital expenditures or depreciation? The answer is depreciation. Remember the $100,000 truck example, the $100,000 amount is the capital expenditures. The fake $10,000 per year is depreciation. Moving along, think of companies like Nike and Coca-Cola. Where do the brand values for these famous brands appear on the financial statements? Well, if you're paying attention, you definitely know this one. They don't. They only appear if they're bought. So if you and I got together and bought Nike, the amount we pay for that brand sort of goes onto our financial statements. If we build up that brand value, it doesn't appear. All right, number 3, or last one, sorry. One major difference between the Chinese income statement and those outside of China, like in the US, is what? It's putting interest expense above operating income instead of below it. All right, let's talk about operating metrics. You might wonder, how healthy is a business? All right, I see its price in the stock market, I see its income, but like how well is it managing its business? Or maybe there's a new management team or some big new initiative that happened a year ago and you want to just see how it's going along. Well, you can look at what we call operating metrics like return on assets, return on equity, and return on invested capital to find the answer. So here we are again, and let's move on to the first one, return on assets. Okay, and before Lulu jumps in, let me just tell you, I kind of have a love-hate relationship with return on assets. In English, we call a love-hate relationship, maybe somebody you love but also hate at the same time. I love that it's harder to manipulate big number like assets relative to equity, okay? But I hate that you're comparing return, which is in this case net income, to a total asset number that was funded by both debt and equity. But ROA is an important metric. You're going to see it a lot, so it's good to know how to use it.
刚刚 James 给大家介绍了一下资产回报率的一个基本概念，以及它代表着什么。那么，我们现在就来结合刚刚茅台的例子来看一下，到底如何计算它的 ROA。其实，ROA 呢，它就叫做资产回报率，它的公式也非常简单，就是税后的净利润除以总资产。那么税后的净利润呢，我们可以刚刚我们在资产负债表中，其实资产负债表可以看到总资产，那么税后净利润呢是在我们的这个利润表中出现的。那我们可以看一下，在对于茅台来说，它的近12个月的这个税后净利润呢，大概是474亿左右的人民币。那么它的总资产呢，同时我们在这里可以看一下它的总资产是1845亿左右人民币。那么直接把它们放到分子分母中这么一除，我们就得到了25.7%的这个资产回报率。那么这个资产回报率得到了25.7%，那它意味着什么呢？我们怎么去 interpret， 或者是说怎么去解读这个数字对于茅台来说意味着什么？资产效率呢，其实我们可以解释为每100块钱的资产可以创造出多少钱的净利润。那么在茅台这个案例中呢，我们可以看到每100块钱的资产，我们是可以创造出25.7元的这个净利润的。所以这个是对茅台来说的这个资产回报率。那么我们怎么知道这个25.7%的资产回报率是高还是低呢？那我们这里就要横向跟纵向来一起比较一下。首先，对于我们如果把它跟茅台的这个历史的资产回报率对比的话，就是从12年到目前的2020年的这个资产回报率的历史的数据来对比的话，可以看到它12年的时候是在35%左右，后来有一定的下降，目前呢是可以看到近几年是比较稳定的，在25%左右，跟刚刚我们计算的25.7%是差不多在一个的小的范围之内。那么这是对于茅台来说，它可能就是目前的是处在一个历史的一个较不高不低的位置吧，可以这么说。那么对于它的同行业的数据来对比呢，如果我们把贵州茅台跟五粮液还有泸州老窖包括山西汾酒这几家公司一起来比一比的话，可以看到它的资产回报率是超了它这几个同业的竞争对手的。它的行业中位数呢也是在25%下面一点点，所以25.7%的这个资产回报率相对来说是在同行业中表现比较好的一个数字了。
All right, so how do we make ROA a little bit better? Well, I mentioned earlier my love-hate relationship, right? Because we got a kind of a mismatch. We got a cash flow that's available to just equity holders spread on top of assets that are financed by both equity and debt investors. So one way we can make it a little bit better is we add back interest expense to the top, but we have to adjust it for the tax rate because remember interest expense is tax deductible. So we just say interest expense times 1 minus the tax rate and we fix this. Another thing people do sometimes is subtract goodwill or intangibles from the total assets. The rationale being, well, I just want to see what the hard assets are generating in terms of net income. This is okay logic, I'm not against it. But these days, goodwill is tested every year for impairment, basically. Do you need to adjust the goodwill or not? Remember, goodwill is sort of excess value you spend when you buy a brand. And if you think that brand is now impaired, like you bought like last year's coolest t-shirt brand, which now sucks this year, you would have to reduce that goodwill carrying value. The conservative way, though, is to keep it in because it's the company's own stupid fault that it bought those assets. But either way, these are some common adjustments to ROA. Okay, next metric is return on equity. I'll tell you in advance, this is Warren Buffett's favorite metric, and it makes the most sense logically for equity investors like you and me because we care about the return to equity because we're equity, right? So ROA and ROE, by the way, are very prominent, popular metrics. You can go on most financial websites and see them. ROIC, which we'll get to next, is not. It's a little bit more complicated. But ROE, as you can see, is going to be basically net income divided by equity.
所以了解了 ROE 的概念之后呢，我们就来看这个 ROE 的这个计算，具体的计算是如何得来的呢？其实它跟 ROI 的计算方式或者概念是非常相似的，只不过对于 ROE 来说，它更多的是从股东的角度而言， 创造了多少元的净利润，所以它的净资产回报率 ROE 的公式就是税后的净利润除以所有者权益，而 ROA 是直接除以总资产。那么同样的，我们税后净利润呢是从利润表中得来的，那么跟 ROA 的这个上面的分子是一样的，就是474亿人民币左右。所有者权益呢，我们这个也是从茅台的资产负债表中得来的，可以看到它的所有者权益是1541亿人民币，所以我们就把这两个数据分别放到分子跟分母上，这么一除，就得到了30.75%的这个 ROE 的数值。那么同样的 ROE 数值意味着什么呢？如果我们要来解释一下，把它解释到对于一家企业来说具体意味着什么的时候，我们就可以看到，其实它这个净资产回报率是说它每100块钱的股东的钱可以创造出多少元的净利润。那么对于茅台这个前三季度的这个净利润而言，我们可以看到它是30.75元的净利润。那么同样呢，如果我们想要知道这个30.75%的ROE 是高了还是低了，那么我们就要同样的去横向跟纵向的去比较。首先是跟茅台自己的历史的 ROE 来比较的话，可以看到它在12年的时候，也是处在一个比较高的位置，大概在45%左右。而后呢，也是16年一直到16年有所下降，但是这几年基本上是在保持在35%，35到30左右。所以它其实这个 ROE 的这个走势跟 pattern 其实跟 ROA 还是比较像的。那么同样的，如果我们再去跟行业的其他公司做对比的话，它的行业的中位数大概是在25%左右。那么茅台呢，刚刚是说30.75%，所以它其实在这个行业中位数上来说还是比较领先的。这就是我们可以计算了两个基本的指标，就是 ROA 跟 ROE 指标的计算，以及它对一家公司意味着什么。当然 ROA 跟 ROE 呢，这两个指标其实你都非常可以直接的在各大主流的财经网站上获取这些数据，这个是不用你自己手动去算的。但是我们为什么要在这里讲一下如何去找到这些数字并且亲自去计算？因为它其实通过这个过程，你能更加了解到这几个数值对一家公司来说意味着什么，以及你要如何运用它们去做出自己的投资判断。
Right, ROE, like any metric, is vulnerable to distortion. And here are a few things that could cause that distortion. Well, first, just having a lot of cash. Some people say, let's remove the cash and look at non-cash ROE because that'll make the denominator look too big. Another one is goodwill. Certainly, if you have a lot of goodwill, again, just like with ROA, some people say you should remove that because it's not really a hard asset getting put to use. Now, factors that can skew it high. One would be share repurchases. We mentioned earlier in this class that when you buy back a share, if you're a company, it goes into the account called treasury stock, which reduces the book value of equity. Well, guess what? If your book value of equity is low, that's going to make your ROE high because that's the denominator in ROE. Another one is research and development expenses. Well, why is this? Well, generally speaking, R&D expenses are not capitalized. Capitalized means something gets put on the balance sheet. So if it's not on the balance sheet, it doesn't go into book value of equity. So book value of equity is lower, therefore ROE is higher. Another one finally is a company that makes money suddenly after having lost a lot of money, and they're finally profitable, they finally have a positive equity balance, and when the denominator of any fraction is just barely positive, that can make that fraction look huge. If you're familiar with the price to earnings ratio, which you will be very soon, imagine a company that just barely gets into positive earnings, like 1 cent of earnings. Almost regardless of what the price is, the actual PE ratio will be huge. And ROE, just like any metric, is vulnerable to that distortion too. All right, we've done ROA, we've done ROE, and now it's time for my very favorite metric, return on invested capital. This is a little bit harder and more complicated. That's not why it's my favorite. It's my favorite because it's the most accurate. Basically, you're going to take operating profit after taxes as the numerator and divide it by invested capital. So what is invested capital? Basically, it's anything, capital that's put into the business on which investors expect a return. Remember, in English, it's return on invested capital. So let's get a little more specific.
同样的，我们来一起看一下资本回报率的计算的实例。因为中美的这个营业利润或者是税前利润的计算的不同呢，我们所以在这里去用了2个例子，一个是以美股的 Apple 为例，另外一个也是同样的英文茅台为例。我们首先来看一下 Apple 的这个资本回报率的计算过程。首先对分子而言呢，就是营业利润乘上1减税率。那么这个税率是怎么得来的呢？我们这个税率不是我们随便凭空臆想出来的，而是我们根据它的实际的财务报表上的数字计算出来的。我们可以看一下，这个它的在这个利润表中，它的有效税率呢是它交的税的多少钱除以它的这个税前的这个营业利润。那么我们可以看到是9680除以67091，那么它的税率大概是在14.4%左右。所以这个税率就是我们在分子上面计算的时候要用到的税率。那么它的整体的这个分子的计算呢，就是它的税后的营业净利润，乘上1减14.4%，我们可以看到是56743，所以这就是它资本回报率计算过程中的分母啊。当然这里的单位全都是100万美金啊。那么我们分子算完了，接下来就来看一下分母。分母呢，其实就是你的投入的用于投资的一部分的资产。那么可以看到，一般呢，其实我们可以看到它的资产的 total assets， 就是总资产数呢，可以看到我们这里用了一个就是期末跟期初的一个平均值啊，因为在前面几个这个例子中，我们其实直接用了这个期末的值，但是因为我们都知道 balance sheet 就是资产负债表，它的这个最终的资产跟负债是某一个时间点上的。那如果我们想取一个更加平均的值呢，更加的客观一点，我们会取各个时段的一个均值。那么在这里我们就取了19年的年末跟2020年年末的这个均值，可以看到它的均值是242652 million。那么我们这里的话就把它放在我们的这个总资产上面。那么总资产呢，它其实跟这个投入资本还是有一点区别的。我们一般呢是减去整个的current liability， 但是在这里呢，我们觉得这个 deferred revenue 跟 commercial paper 它其实不算在我们的这个分母的这个current liability 里面，所以我们就把这2部分给去掉了。那么剩下的呢，就是它的 total asset， 就是总的资产减去除了 commercial paper 跟 term debt 之外的 current liability， 就得到了我们的分母。那么分母呢，可以看到是242652百万美金。那么我们把它一除的话，就得到了 Apple 的这个资本回报率是23%。那么我们得到了这个23%呢，就会有一个问题呢，就是说它到底是高了还是低了？那么这里的衡量标准呢，跟 ROA、ROE 有一点不一样的地方呢，可能就是说我们想要衡量，因为你资本回报率是你说就相当于你的收入嘛，那么你肯定是想要把这个来源这个资本的收入跟来源这个资本的成本进行对比，那就是加权的平均资本成本。我们叫它 WACC。那 WACC 呢，其实它就是你使用的你举债的一些成本，在与你举股权融资的成本加在一起，那就是我们可以得到它的加权平均资本成本。可以看一下 Apple 的数据呢，我们把它带入到这个公式里面，可以得到它的 WACC 是4.66%左右，是小于它的这个资本回报率 ROIC 23%的。所以说它是这个资本回报率是一直为它带来了正向的这个资本回报的，而因为它的这个回报率是远远高于它的资本成本 WACC 的。同样呢，如果我们以贵州茅台为例的话，它的分子也就是息税前的利润乘上1减税率。那么这里的有效税率的计算方法跟刚刚苹果的这个计算方法是类似的。我们可以看到所得税费用除以利润总额，就得到了25.29%的这个有效税率。那么 我们息税前的净利润呢，因为刚刚中美的计算的关系不同，它就是净利润加上利息支出加上所得税费用，可以看到我们就得到了这个息税前的净利润。那么分子计算完了之后，我们同样的来计算一下分母。那么分母呢，这里我们直接用了这个投入的资本等于总资产减流动负债。那么我们这里就得到了，这样一减的话，就得到了我们的分母。所以带入到我们 ROIC 的公式中去，它就是31%的 ROIC， 同样也是一个比较高的一个数额。然后对于茅台而言呢，当然我们也要给跟它的这个 WACC 相比，就是加权的平均资本成本相比。所以如果我们把一些数据，茅台的数据带入到这个 WACC 的计算公式当中去，我们可以到它的 WACC 大概是在9%左右，也是远远小于它的 ROIC 的。这说明它的资本回报率也是非常好的，远远大于它的这个资本的使用成本。那么如果我们来横向、纵向继续比较一下贵州茅台的这个资本回报率的话，可以看到它 ROIC 的这个走势跟 ROA 跟 ROE 是非常像的，就是先有一点小幅的下降，目前是稳定在30%到35%之间。那么同样的，跟白酒这个行业来对比呢，与贵州茅台、五粮液、泸州老窖、山西汾酒进行对比呢，它的这个资本回报率也是稍微低于山西的汾酒，但是也是在行业中位数来说是比较领先的一个地位。所以说可以看出来，从 ROA、ROE 跟 ROIC 这三个指标来看，茅台跟 Apple 都是处于一个比较好的一个营业利润的状态，所以说它的利润率是非常好的。那么如果我们想要更多的看这些数据呢，其实各大主流财经网站上都有，但是 ROIC 呢，可能是像刚刚 James 所说的，他最喜欢的一个衡量的指标。
All right, let's do a quick quiz. First question, if a company, this is one of my favorite questions to ask analysts applying for jobs, if a company shows increasing ROE while their ROIC stays flat, what's going on in that company's capital structure? Typically, that company is adding debt, and the debt can be used to increase ROE, which might not necessarily be bad, but it might be riskier also. But ROIC is like the X-ray glasses, okay? You can see through any attempts to manipulate capital structure. So for example, maybe a company's management gets paid based on how well ROE does. That might give them a separate motivation to take on extra debt to bump up ROE, but it's also increasing the risk of the company. But if you use ROIC, you'd notice that. Number two, if a company has done a lot of share repurchasing, will that make its ROE higher or lower than it would have been otherwise? Well, it will make it higher. Share repurchases, remember, go into treasury stock, which is called a contra account, meaning it reduces the book value of equity. Since equity is your denominator in return on equity, if your denominator shrinks, the product of that fraction goes up. And last question, should you strip out goodwill when calculating these metrics, ROA, ROE, or ROIC? It's up to you. It's up to you. It's a judgment call. I generally don't. But if you did have a case, let's say, where a company maybe made a very bad acquisition years ago, had a lot of goodwill from that, and maybe that CEO left, and a new person comes in, and this guy's got a whole different plan, and it's going pretty well, you might say, well, wait a minute. Yes, it is the company's own stupid fault for having all that goodwill years ago, but they've got a new agenda now. They're doing things differently. They've changed. So I'd like to take a look at how well that change is going. In that case, yeah, maybe you would strip it out. If investing is about anything, it's about valuation. Everything comes down to whether or not you buy a stock, right? So let's look at valuation through the lens of three different methods. By the way, all valuation is about comparison. Some people say there's absolute valuation, relative valuation. No. You can't have valuation without comparison, right? I mean, if you give your kid a toy, does he or she know to feel happy? Well, yes, you got a new thing, right? You compare it to the past, but If some other kid got a better toy, then your kid feels sad. If some other kid got a worse toy, then your kid feels good. That's just how the human mind works. Economics, guys, is a social science. So anyway, back to this. There are kind of the direct comparison methods, which are like using prior transactions or comparable company analysis, and there's discounted cash flow valuation, which is still a form of comparison, just more indirect. Let's get into a little more detail. So if you sold your house, or an apartment, you already know what a multiple is, okay? And or let me say it like this, if you sold your apartment, you would have easy comparison to other apartments to determine the price. Okay, if yours is a little bit nicer, maybe you charge a little bit more. Okay, but you just look at apartments with a similar size and similar area. Well, it's kind of hard to find businesses that are so exactly comparable. So instead, what we do as analysts is standardize comparisons by using multiples. It's easier than it sounds. And you've used them already. If you've bought real estate, you've seen your apartment quoted at price per square meter. If you've bought rice by the kilogram, okay, you've used a multiple there. For stocks, we use multiples typically comparing price to like revenue or an income stream or maybe an asset. The very first multiple to talk about, and the one that gets used like literally 95% of the time, or maybe even more, is price to earnings. It's very simple. You take the stock price and you compare it to the last 12 months of earnings. Very simple, right? It's a little bit weird though, because as investors, we're always buying the future. We care about what happens in the future, not what happens in the past. So in this case, we're kind of agreeing to use the past as a proxy for the future, which may or may not work, right? But PE is so easy to calculate and it's very pure because as an equity investor, you basically own the earnings of a company. So it is by far the most used metric. There are some variations though. Oh, by the way, here's an example of the US market PE. And here's current, this is 2008, 2009. This is the tech bubble of 1999, 2000. You say, what? I didn't know stocks were even more expensive in 2008. Well, here's the thing. It wasn't so much that P in the PE went up. It's that E went way down because the US had a financial crisis. And ironically, investors, the market was forward-thinking enough. They saw some stimulus packages from the government. They said, you know what? Yes, earnings went way down. But we're not going to freak out so much because those earnings are going to come back up. So we're going to sell the price down somewhat. I mean, in some cases down 40%, but not as far down as earnings dropped. So in this case here, you had P going way up with very little earnings. In this case here, you had E going down, P going down somewhat, but just not as much as earnings dropped. So it's easy to be fooled by the charts if you don't understand how the equations can work. Anyway, a couple of ways to do PE. One is forward-looking PE, or different ways to do PE, I should say. If we go back to Motai, the example we've been working with, forward PE takes the next year's earnings and compares it to the current stock price. This is more pure, right? Because I just said, as investors, we're buying the future. Question is, though, where do you get next year's earnings? Well, if a stock is lucky enough to be covered by sell-side analysts, you can take an average of their projection of the next 12 months' earnings. Or you could use your own if you're like deeply into that stock and you're serious enough to project those earnings, you could use your own. In this case, we take the price, the projected earnings, and we get a 59 for, this is very high, okay? You might see like 4 or 5 or 6 or 10 sometimes. This is a very high projection. So we can tell that investors have very high expectations of this company, or maybe that they think that next year's results are not necessarily going to be indicative of how things are going to be after that. Another way to adjust is using what's called the Shiller PE ratio, named for Yale professor and Nobel laureate Robert Shiller. He basically said, you know what? Earnings can be volatile. Instead of just taking 1 year at a time, let's average the past 10 years of earnings and adjust it for inflation. That's why it's also called the cyclically adjusted PE ratio. And studies have shown that over time, this Shiller PE or CAPE more closely correlates with stock prices than just the plain regular PE. So why doesn't everybody use it? Well, it's just harder to calculate and harder to explain.